This Twin Peaks Investing Podcast is brought to you in association with ShareScope, the UK's #1 investment data and analysis software for private investors and traders. Visit sharescope.co.uk and discover the advantage.
Hello and welcome to the Twin Peaks Investing Podcast. This is podcast 157. It's the 8th of July. It's nearly 7:30. My name is Peter Higgins. I'm your co-host on this particular podcast. And with me is my co-host, the brilliant Henry Viola Hare. Henry, how you doing?
I'm very well, thank you, Peter. Had a good start to the week so far. Pleased to be with you.
Good. I'm assuming that's in life in general, Henry, rather than just the markets, yeah?
Well, it is actually. Been nice and busy at work, which is keeping me out of trouble. And I also got an opportunity to meet one of our audience members last week, David Sumners.
Oh, brilliant. Yeah, good chap.
Top chap. Went for a pint with him at the Banker just down the road. We had a very nice evening, nice catch up. Unfortunately, I had to dash back to the office after about an hour and a half. So we had to put a pin in it, and we're going to be scheduling a dinner sometime soon, which was quite nice anyway. So very nice to meet him in person.
Brilliant. I think that's probably a blessing in disguise for David, because had you stayed out, had it been an evening event, he would still be suffering now, couldn't he? Trying to keep up with you. Right. Okay. No, it's brilliant to hear that. And I met David. He's a lovely individual. So that's good that you've done that. I wanted to share, if I may, Henry, start with some feedback we received, because obviously we had the really, well, you shocked me, and I was a bit like, oof, regarding the news that you'd received regarding one of your dear friends. And so we had some feedback from Trader Mark. So thank you, Mark. And this was his feedback regarding the last pod. Another great listen with some of my long-term watch list companies discussed. So sorry to hear your tragic loss, Henry. Thoughts are with you, and sincere condolences to his family. So that was from Mark for you, mate, regarding your friend there. Additionally, we got some from Grayling, whose Twitter account is @tenchblank. Sorry to hear about your dear friend, Kevin. All the best to his wife and children. Thank you again for a great show. Loved hearing about all the industrials which I've never invested in, and thoughts of some of these becoming potential takeovers. It gave me ideas to think about. So thank you, and Peter. So that was generous feedback we had from those two. And then we had one from Richard at Richard without the full spelling of it, Sut76. Really like the stock picks highlighted in the show. They'll have their day, and some supply very good equipment which we rely upon. Thanks. So some really good feedback there, Henry. So yeah, good pod. Went down well. The industrials and the undervalued nature of what we picked and the ideas we picked across the UK and US, I think, went down really well. Any thoughts regarding some of that feedback, mate?
Yeah, I mean, generally, I've had some really nice messages from people, to be honest. And it does make a difference. And I think those people that know me well and that have listened to the podcast for quite a while know I try to be quite an upbeat person. And this was something that I mean, there's never a good time for something like that. It was bad news, and it did knock me off balance for a couple of days. And actually getting notes from people was really nice. It was really supportive, and I do appreciate everybody that's written in, because it does make a difference at a difficult time. So thank you.
Yeah, indeed. I think we've got a wonderful audience, really, who get what we're passionate about, what makes us tick, and the fact that there's other stuff going on in our lives other than the markets, and family and friends and dear loved ones that we're always thinking about, considering, and having to dash around and look out for. And and equally we have those that do that for us, as well, who are supportive for us. So we've got to give as well as receive love, care, and attention. I think it helps us all heal. So I'm pleased that you've got that feedback, Henry. And equally, I will be giving you my non-virtual hug when I see you as well. and top of the conversations that we've had recently.
Well, saying that, we are galloping at a rate of knots towards August the 13th, aren't we? And what's happening on August the 13th?
The Investors Summit is happening on the 13th, Henry. The only way I can describe it, and have been describing it, although I love what we're doing to bits regarding the numbers of people we've got involved in and the quality of people we've got, is the equivalent of a 10,000 piece jigsaw. And the person that sent it with me with love. But the picture on the box is of white snow. It's a picture of snow. And I've literally put the corners in. and I'm going, where does the next piece go? You know what I mean? It's like a moving feast of it. And someone's blowing, there's a gust of wind blowing the pieces I've already done off the table. But yeah, it's going to be fantastic. We've got some fantastic individuals involved in it. The schedule has gone live. You can find that at www.investorsummit.co.uk/schedule. And I can run through some of the individuals in a minute with you. But yeah, that's causing me to go even more bolder, Henry. I think I said to you, I'm going to threaten the boss that I'm just going to dome it all off to look like Cold Jack, but she's got, no, don't do that. So we'll see what happens. But yeah, that's what's happening with me, really.
Spectacular. Well, it is very exciting, and I've got to say, middle of August, we are a bit over 4 weeks away, give or take. I am really looking forward to it. I mean, those of you that have been listening to the show will know Peter and I are going to be there live. We've got a live episode of the Twin Peaks podcast up on the stage with our sponsors at ShareScope, who will be behind us. Hopefully not showing the two of us up by contradicting with real data everything we're saying in real time, but we will be there. So one of the questions I get asked semi-regularly on social media is what is this ShareScope thing that you guys use? Why do you use it? What do you like about it? And you'll get the opportunity to come along and see this in real time. I often describe it to people as sort of the Bloomberg of the retail investing world. It's got a huge amount of data that it processes for you, going back for years and years and years. And it allows you to very quickly, very accurately analyze huge amounts of data about the stock market to find investments that meet your criteria. And more importantly, to analyze forecasts, to look at how your own portfolio is performing, and really start to give you some tools to make informed decisions about investing that aren't just, reading the Investors Chronicle once a week, or listening to the odd podcast, or meeting a guy down the pub and investing in a gold mine with no gold in it. So yeah, hopefully those of you that are there will get the opportunity to come and see us. And do go up to the ShareScope stand as well. I believe they're going to have a stand there on the day. Go and have a play around with the tool, because it's a very good platform, and I can highly recommend it to our listeners.
Absolutely, I think it's won more awards than any other platform for retail investors over the past 20 odd years. So they've absolutely smashed it. So yeah, and obviously they sponsor us, so we're going to be biased, but there's no need to be biased because it's actually a quality outfit. Right. So Henry, including us, we're down the rankings there as to who's presenting and who's doing panel sessions and so on and so forth. But some of the noteworthy experts and industry leading individuals that we've got doing keynote speeches and panel sessions, etc., are Stephen Yu of Bluewell Capital, Simon French of Panmure Liberum, The Economist, Annabelle Brodie-Smith of the AIC, Justin Urquhart-Stewart. I think the most recent firm he was with us regionally, but he's been around for years and everyone knows who Justin Urquhart-Stewart with the red braces is. John Stepek of Bloomberg, Laura Foll of Janus Anderson, Moira O'Neill, freelance multiple award winner. She's just recently won another 2 awards. Finance journalist, personal finance journalist, and FT Money columnist. Micah Curry, formerly of Hargreaves Lansdown. Neil Shah of Edison Research. Lord John Lee, the first ISA millionaire. Stacey Parsons of Retail Book. Will Fenner of London Stock Exchange. Nick Brind and Ali Goodwin of Polar. They're going to be talking about two different investment trusts that they lead, technology and also financials. They're going to be covering. Cathal Frail, the serial entrepreneur, that's currently was founder of Poolbeg, HVivo, and others. He's been involved in lots of different companies. He's on it. He's a very sharp cookie. Andrew Oxlade of Fidelity International, Robert Crayford of CQS, Fernando Valda of Energize Africa, Patrick Tour of the Mail on Sunday. He's a journalist, a very significant individual as well. He writes a lot about shareholder engagement and what's going on with the markets. Very proactive individual. Reg Hoare, director of MHP Communications. Danny Wallace of the Private Investors Network. David Bell of, well, he's been involved in quite a few companies, David Bell, and he's currently involved with Think Money, Fink Money. And you've got Nimesh Shah, who's an accountant and tax specialist, really, really smart cookie. Malvi Varja of Rathbones, Lindsay Cook, who's also a financial journalist, and Robert Martin, the CEO of Menphys, where I am an ambassador. He's going to be talking and speaking on a panel, which is going to be about all things to do with investments, finance, and he's going to put a disability side of it on, as well. He speaks on the behalf of on the finance team regarding various different political angles. So yeah, we've got loads for you there. So please go and buy your tickets now. Early bird tickets are 22% discount, and all told, it's 84 quid for the entrance to the event. You get that particular ticket. It also gives you a free breakfast if you get there before 9 o'clock, all your refreshments throughout the day, so coffees, teas, refreshment, etc. A 3-course lunch in that ticket as well. And if you're fortunate to get a ticket quick enough, you'll also get the VIP drinks session in the price as well, for your drinks. After 5:30, we've got essentially an open bar, but don't say I told anybody it's an open bar, because get it drunk dry for that. So that's where we are, Henry. So if you are there after 7, 8 o'clock, you might see me and Henry looking a little bit worse for wear, because I know I'm going to be, trying to just get over the day. That's going to be full on exhausting. And I've got a fireside chat with Stephen Yu of Blue Whale Cap as well. I'll be doing a one-to-one with him live on the stage as well. So lots going on, mate.
Spectacular stuff. I mean, I think there's a lot in there I am very excited about. I mean, I'm trying not to have a fanboy moment over Lord John Lee. I think he's one of my favourite ever investors. I think if he comes over to say hello to me, I might just pass out from excitement, which would be horrifically embarrassing. But
I will send him round to see you after we've done our live pod.
Yeah, exactly.
Right? But I might get him to come in the audience. Maybe that will just get you to just go, got to be on my best behaviour now and do my thing. But yeah, he'll be there. He'll be there. He'll hopefully be there all day as well, and hopefully join us for a drink afterwards. Lots of people bought tickets already. Early bird tickets still going. I think the beauty of it is, it's an opportunity for us to showcase some of the best talents that we've got in the city that are covering investments, personal finance, even the inheritance tax stuff we're going to cover, because it's constantly changing. And given what's going on, potentially it would have happened before we actually did the product, the event actually. Some of the changes potentially that's going on regarding the cash ISA, that's going to be discussed as well, and you name it, private equity stuff, tech stuff, pensions. We're going to cover the lot. Lots of stock ideas are going to be shared as well. So
well, I think like you say, there's lots of smart people there, and I think it's attracting a lot of smart people. So
yeah,
one of the things that excites me the most about events like this is actually getting the opportunity to meet other like-minded investors, not people that are there to, sort of grab me by the lapels and shake me and go, "Oh, Henry, what should I buy? What do you buy? Oh, you're an idiot," or "I'll go and buy it." That's not a fun experience for me, if I'm honest.
Yeah.
The sorts of people that will be at this event, they're there. They are independent thinkers. They are independent investors. They're independent journalists. They've got their own view, and you're going to have smart conversations with these people in a way that you don't usually get the chance to in public life. And I
Yeah.
think one of the things that really stuck out for me after the Master Investor show that we did was our guest, Paul. I think it was Paul, the name's eluding me now. The chap we had on that was the head teacher, the economics teacher.
Paul Edenbrow.
Paul Edenbrow, that was it. Sorry,
Yeah,
Paul.
yeah.
I ought to have remembered that one. And anyway, Paul came up to me and he said, "Oh, I was so nervous about coming to this thing because I'd never been to one before, and what do I know about investing? I just listen to the Twin Peaks and lose money occasionally." And I went and I had such a nice day meeting other members of the Twin Peaks audience, and it was really lovely to meet you two in person. I mean, I don't know about that. I'm not going to blow my own trumpet too much there, but I do think it's an opportunity to meet some very, very nice people and have a very nice day out. And like you say as well, there's a big bonus in this, which is the free food as well. Because as somebody that lives in London, I can tell you, food is not cheap. A day out, 3-course meal, 3 meals, you could be looking easily at £50 just on that. And we're not talking a sausage roll that's been dropped on the floor and kicked around for half an hour. It's properly catered, good quality food.
3-course, high standard food, mate. Yeah.
A great venue, great speakers, great food. I mean, there's us too as well. But, I think there's a lot there to enjoy.
Absolutely. So just get to www.investorsummit.co.uk and purchase your tickets quickly, ladies and gents, and we'll look forward to seeing you there. I got tied up with a few individuals because I mentioned a stock that I own, Henry. So I've got to give a shout out to a couple of individuals here. And they've asked me to try and get Lord Peter Cruddas, of CMC Markets fame, to the event. Because CMC are getting into tokenization of all things, including cryptocurrencies. Bear with me, Henry. It's not just crypto, it's also other bits and pieces. But Stuart Woods gave me a shout and said, "Peter, can you try and get Peter Cruddas there?" And also the CEO of I think it's StrikeX as well, to the event. So I'm actually currently working on that. And if we can get Lord Cruddas there, that'd be absolutely amazing. Or CMC Markets there, it'd be amazing. So essentially what they're trying to do with the tokenization is allow everybody to have access to almost every single entity that's out there. And at the moment, Henry, what they're trying to do with the likes of, not particularly them, I'm sure they're going to get round to it, is the likes of SpaceX, for instance, is private, yeah? But if you as a private investor can get access to a share of that somehow before it's listed, if it ever gets listed, in fact, but the valuation keeps multiplying, yeah? It's a bit like if you could have got, what example can we use? Pre-IPO. What did you have recently? So Darktrace, pre-IPO. If you were able to get a token or a share of that before it listed, we know it got bumped. For everything gets bumped, doesn't it, just before it gets listed? So you bought a token that was valued at £1. You bought the token for £1. It IPOs at £5. It then zooms up to a tenner. You've made tenfold your money on 1 year after it's IPO'd. That's a sort of idea. But some of these cryptocurrencies are already live. And there's one that CMCX have got, I think it's 50 million, I don't know, are they called tokens or coins? Coins of, and it's called StrikeX, and the ticker symbol is STRX. Very highly speculative, obviously. The price of which has doubled in the past, I think, or possibly year to date. So that's how fast it can move up and also potentially move down.
This explains why I got bombarded in the middle of the week with a load of people going on about cryptocurrency. I thought I'd been tagged on a spam thread. It was you, wasn't it? It was you talking about CMCX, and I was looking through my phone thinking, what on earth is going? I've got all these people I've never heard of going, oh, CMCX, they're geniuses. Get your bitcoins now. I'm thinking, what on earth? Anyway, that
Henry,
makes sense now.
I was merely replying to the individuals that were speaking to me regarding it and thanking me for talking about various different things. That's all I was doing. So apologies that you got bombarded.
Well, I'll tell you what. to everybody out there that is into their bitcoins and their tokens and all the rest of it. When you are multimillionaires and you've made your fortunes, and I'm sat there penniless on the streets, you can donate to the Henry Viola Air Nuki Brown charity fund in sympathy.
Yeah, he doesn't mean that. The other individual was al.strx at al_STRX, who was talking to me. He was the one that first started talking to me about this tokenization and all the traditional assets that we've got. So if you can get a token for Tesla, mate, instead of buying the whole lot, a token for Apple, a token for Amazon, etc., rather than buying the whole share. Why would you not
just buy the share?
Because some people can't afford a share that's $1,000 a share.
Yeah.
Some people have bought fractions of Henry, of Berkshire Hathaway shares.
They have.
Yeah. They have.
That's true.
So it's a similar, but yeah,
that's true.
The big difference between Berkshire Hathaway and crypto. True. I get that. So yeah, CMC multi-asset wallet is basically going to go out web tokenized and Web3 assets. So yeah, so that's what we're going for. That's what I've said. I'll just give them a little plug there. At Trade Strike BVI, accelerating digital strategy is what CMC are all about, and going forward. Right. So that's me covering off that element of the feedback regarding the Investor Summit. I'm going to try and get CMC there as best I can. I'm not sure Lord Kudos takes calls from a little chap called Peter Higgins, but I can only try.
This is a quick hello to you, our valued Twin Peaks Investing podcast listener. Whatever channel you're listening to, please make sure to subscribe and you'll always be the first to get the new episodes. Thank you for your continued support.
I can just imagine the call now. Yeah.
I've got a feeling their head office is down the corner from mine. I could just wander down there one day and go and sit in the lobby.
If you want to take that on, I'm sure. Listen, you're far more respectable than me, and I think all of our listeners would agree. If you want to go and have that conversation, mate, on my behalf, or
I've got an appointment at 1 o'clock, please.
Yeah, please.
God only knows what I'll say when I get in there, but
yeah, so that'll be good. But one last thing on this, Henry, right? You remember everyone lampooned Robinhood, the platform?
Yes. Yeah.
And what they were up to. The share price came out and they went, I think it went down, drawdown about 50% or something like that. It's since rocketed, I think, tenfold. Yeah, since IPO. And the CEO basically came out and said, and I'm quoting him now, tokenization will be the biggest innovation. The SEC knows it. This opportunity is too big to ignore. Tokenization resolves liquidity problems.
That's such a load of nonsense. Come off it. That's the biggest load of nonsense I have ever heard.
I'm just quoting him, mate. I'm just quoting him. So let's see if that is the case. Liquidity, mate. We will see.
Right. You don't get more capital by splitting existing capital into smaller. Anyway.
Right. You've again came up with the idea of the topic we're going to cover here. All right. Once you can give a little spin, I'm going to give a little heads up on what metrics I've found regarding what your topic is. I think what I'll do when you've done that as well is carry on and give a couple of the shares that fall into the aspect that you've talked about, then let you go with the first stock.
Super.
Is that fair enough?
Yeah.
Cool. All right. Go for it.
Good.
So what was your idea, mate, that you came up with it in your slumber that you went, aha?
Aha, exactly. So we've talked a lot about quality investing, and we've talked about income investing, and we've talked about different sectors, and we've even looked at undervalued shares. But one area of the market that we've not really talked about is good quality businesses on AIM. So AIM is the alternative investments market, as we know. And AIM was originally set up to home small, innovative businesses that wanted to raise capital from the public and have listed shares. So the idea was, if you were, I don't know, a little manufacturing business in, say, Norfolk, and you wanted to raise 10 million, you could create the shares. You could go and get an investment banker to then help you list those on AIM, and you would be a publicly traded entity. You're not big enough to be on the main FTSE, and as such, it was recognised that perhaps the governance requirement shouldn't be as strict and the reporting requirement shouldn't be as strict. But it was generally accepted that small businesses need capital just as much as big businesses. And therefore, this was supposed to be a good idea to help smaller businesses list and grow, and also help investors to access part of those smaller businesses. Now, in contrast to previous episodes where we've talked about what we perceive to be undervalued shares, I particularly wanted to focus on what we thought might be good quality this episode. So with undervalued shares, the idea is that you've got something that's worth £1 and you try and buy it for 50p. Now, if an asset is only worth £1, it's only worth £1. It's not worth 100 million, right? It's just got a discount to its intrinsic value. The common example that's given actually comes from the days of Benjamin Graham, and he used to talk about cigar butt investing. The idea being that, apparently a cigar, they're very, very expensive. They cost, $10 a piece back then. Not everybody's got the $10 to burn, but rich cigar smokers used to smoke the cigar down to the butt, throw it in the gutter. If you went round and picked up those cigar butts, you could still smoke them. I mean, admittedly, they're dirty and they're maybe a bit soggy and they don't taste great. But if you really wanted to smoke a bit of a cigar, you could. And you didn't have to buy the full cigar. So that's sort of the undervalued strategy. You're looking for really beaten up investments that nobody else wants. In this episode, I thought we could talk about some really shiny investments, the best of the best, the ones that are real trophy investments, winners in their field. And to identify those, there's a few different things. I mean, we could talk about the financial metrics, return on capital, return on assets, return on invested capital, turnover growth, profit margins. But you could also talk about momentum. So if you have a share that's gone from, say, £1 10 years ago to £10 today, you've got a 10 bagger. It's gone up 100% year after year after year. Would you really care what the return on capital employed was? Or would you just be interested in the fact that this investment is returned, a 10x return? So I thought that would make a good topic for today's episode for our listeners.
Brilliant, mate. Yeah, thank you for that. And I think, given what you said to me, I went away and had a look at this. And just to point out, we've spoken on a regular basis about AIM. We're always saying it needs to stay above 700 as an index, the AIM All Share Index. And on the 7th of April this year, it was at 612.87, absolutely getting smashed to ribbons. It's bounced back since. We've spoken about the bounce back in the previous podcast. It's currently sitting, if I got my numbers right, at I think it's 7775 is the number the index is sitting at. And I think the 1 year high is 787 as to what the index is. So it's not too far away from where it should be. And I think last year it broke that 815-ish, I think is where it's at last year as a high. A couple of stocks to mention, or some stocks to mention, and then Henry's going to go on to his first one, then I'll do one, that have done significantly well in the last 6 months are, and this is one I hold, ITM Power, so we're not going to talk about that. That's up 127%. Uniphar, which is up 83%. Sigma Pharma, which is up 52%. CVS Group, which I've not mentioned, I do own that. The pets. Remember when it all kicked off last year, Henry, and they were talking about all different things and going to go and hammer them because they're overcharging people and all the rest of it. I've got a chunk of those waiting for the government to say, actually, we're not going to bother because people love their pets. So it's already up 48%. Alliance Pharma is up 47%. Pan African Resources is up 46%. Watkin Jones is up 39.7%. Even though it's done well so far in the past 6 months, I'd have my concerns about Watkin Jones because of what's going on with students and overseas students. And there's lots and lots of accommodation out there regarding students at the moment. And landlords are giving up their tenancies. So there could be an oversupply regarding that. So even though it's done so well, I'm not so sure about that. Fevertree, we've discussed in the past. That's up 35% over the past 6 months. I'm not sure we've spoken about this company, but we might need to, or I've forgotten about it. Property Franchise Group, Henry, up 33%. Have we spoken about that before?
Oh, we've come close to it. There's a few. It's one of those little listed estate agency businesses.
Right, okay.
I believe.
We might need to have a chat about that at some stage. That's up 33%. FD Technologies, that's up 31%. Mortgage Advice Bureau, I'm sure you've spoken about that already before.
I've definitely spoken about that. MAB.
Yeah, MAB. Yeah, that's up 29%. Jet2 is up 22%. MPE Evans Group is up 22% also. Johnson Service Group's up 20%. And one I'm going to speak about later, won't tell you the name just now to not put you off what Henry's talking about, be more excited about what I'm going to talk about rather than what Henry's talking about, is up 15% in the past 6 months. So those are other stocks for you guys to research. And one of them that's done a share consolidation and has done well, and I'm thinking about listing also in the ASX, if I get this right, is Greatland Resources, used to be known as Greatland Gold. That's another one that's done significantly well on the AIM index, AIM all share. So any of those jump out at you, Henry, or you think, yeah, I actually quite like that, or I actually hold one of them. I forgot to mention Marlowe, or did I? At 37% as well. Any there for you, Henry? Any of those?
Well, I mean, Mortgage Advice Bureau, and I'm a bit biased on this because it's one I've previously covered on the show, but very good quality business. And again, AIM is one of these indexes that's got a very dichotomous public image. Some people are going, well, look, it's full of little in fact, I'm not going to use that word, little terrible businesses.
Be polite. Be polite.
Yes. Yeah. This is the problem with recording live on air. Yes, it's full of terrible little businesses with no revenue and no assets and dodgy directors that are just skimming money off the top, and you should avoid it like the plague. But then on the flip side, you've got some really, really great success stories. I think one of the ones that always catches my eye, pardon me, is Rightmove. I'm fairly sure that started on AIM, and that's just done terrifically well since it listed. Hugely successful business. So there are the success stories in the industry, and more particularly in the index. Go on. Oh no, you don't.
Trying to keep it on the low, mate, and you've blown it again. Yeah, I own Rightmove. I'm happy with Rightmove. The bid last year didn't happen. The share price got smashed, and I thought he's going to come back. They haven't come back. And the share price is actually back to, I've discussed it with a few people in my private DMs. And the share price is above or at where the bid was last year. So if they come back now, it's another 25% premium to what the price is, because they can't get away with saying, oh, we'd like to buy you for the same price of what we were looking to buy you at last year. Not going to happen. So I suspect it could be a good premium to the current price. So I've got Rightmove on the low.
Excellent, mate.
Another one you keep trying to dig out everything. I think you've worked out a system of what I like to buy. If anyone's negative on it or they've had an issue, that's the sort of stuff that
Peter's gone for it. So, yeah.
Yeah, exactly. Everyone hates it. Yeah, Pete's got it. Yeah. So yeah.
Well,
did it start on AIM though? I'm not sure about that. I have to do some digging.
I might be wrong on that. I'm throwing that out there as a thought. I mean, the other one that's very, very similar is Auto Trader. I think it's Auto Trader.
Auto Trader. Yeah. I know Domino Pizza started on AIM, even though it's the other listings in the US. You know.
Well, Domino's Pizzas. I mean, this is one that my friend Faisal keeps going, oh, it's amazing, and he's loading up, he's running around with his wheelbarrow, and I'm going, I really couldn't care less about Domino's Pizza. Not an investment for me at all. I'm just not interested in it.
Fair enough. All right then, mate. Do you want to give us your first play?
Well, this is one that I think quite a few of our listeners are going to know, and I suspect some actually hold. It's
Okay.
in a very cherished London institution in the asset management sector. And we've got some incredible names in the asset management sector that are so beaten up at the moment. It's unbelievable. And this business today is one of them. It's Tatton Asset Management. The ticker is TAM, who offer on-platform discretionary fund management, regulatory compliance and business consulting services, as well as whole-of-market mortgage provision to directly authorised financial advisors across the UK. Now, the business was founded by a chap called Paul Hogarth, who had previously co-founded and developed what was the largest independent financial advisors support business in the UK. It was a business called Rockhopper, which some of our older listeners will recognise the name of. Now, Paul's vision in starting Tatton Asset Management was to create a range of services to power the UK's financial advice service. We were well known for having great financial advisors, but the technology was quite fragmented. It wasn't always necessarily a great offering. And he really wanted to facilitate a platform or create a platform that facilitated expansion for financial advisors and enable them to provide better service to their clients. So Tatton Asset Management does this in a nutshell. It basically provides the infrastructure to enable financial advisors to do their job. They provide support services, compliance and business advice to help firms and financial advisors respond to regulatory changes. Now, as you know, if you're going to be an independent financial advisor or a financial advisor of any description, you've got to go through a huge amount of regulation and compliance. You can't just set up shop at the end of your street and start taking people's money and doing what you want with it. You are heavily regulated. And Tatton help the individuals that provide financial advice to make sure they stay on the right side of that legislation, that they're always in compliance with the rules and regulations. Now, the group supports IFAs, and those IFAs control £21.8 billion of assets under management across 20 different UK advice platforms. They've got 425 member firms, so these are firms that are using the Tatton services, using the Tatton label, and they represent over 1,100 individual financial advisors across the UK that use their regulatory compliance service, and also provide mortgage services to over 1,900 mortgage advisory firms with 3,500 advisors. The business is very, very high quality, a 45% return on capital employed. It is forecast to grow its turnover at 12% next year. And even better, it pays a 3.5% dividend. So you get paid to hold a great quality name. And this to me is the sort of business that is exactly what should be in AIM and exactly what people should be looking for when they are sort of trawling the bottom end of the market, having a look at what's available on the alternative investment market.
Okay, love the sound of that, Henry. A couple of questions for you then. Market cap currently, please.
That's a good question. Let's have a look.
How has it performed? You're saying it's quality, and AIM's done really well to bounce back from where it was. How has it performed thus far this year, mate? So I'll get a feel of how it's doing in a volatile market, please.
Yeah, it's on a market cap of 418 million. And year to date, it hit a 52-week low of about £3 a share back in 2022. It then climbed up to £5 a share in 2023 by the end of 23. It hit an all-time high of about £7 a share last year, which is currently about where it is today, £6.96.
So it's sitting right at its two-year highs almost, 1 year high. Yeah?
Yeah.
That is really, really good. That shows some strength. And the asset managers have been doing reasonably well since April the 7th, sorry. The thing I've dug out here, Henry, and this will sit well with you regarding the quality of stock that you like is that you've got Keith Ashworth-Lord of the Buffetology fame. The Free Spirit Fund does have that as one of its larger holdings. I'm just trying to see what the last date I've got here with regards to it. Just have a look. That's going back to June, and they came out with the trading update, didn't they? Sorry, strong full year results were out on the 10th of June as well. And what were they? They're actually the largest holding of this Free Spirit Fund for Keith Ashworth-Lord. So 9.74% was the holding that they had. So they're very, very keen on that quality of company for an AIM stock, and it fits the Buffetology model that he runs regarding his funds. So that shows the high quality of that particular one. Just trying to see.
Well, their financials. So for the year ended March 31st were terrific. I mean, group revenue increased 23% to 45 million.
Yeah.
Operating profit was up 23% to 22 million. Earnings per share increased 25% to 28p a share. They've got net assets increased to 50 million from 43 million. And they've got cash of 32 million on the balance sheet, up from 24 million last year. And most importantly of all, for an asset manager, assets under management increased by 24% to 21.8 billion. I mean, it's just up and up across the board.
You want that strength. You want that strength because so many of the other managers have been struggling with outflows, and it gets a bump when it got outflows have ceased. They've ceased, but are they going up? Does it stop falling? So that's increasing. That's really positive for Tatton. And Keith Ashworth-Lord, he knows what he's doing. So yeah, good call, that one. I like that one, Henry. And it's done well for shareholders. And for Keith Ashworth-Lord to have that as his top holding in the Free Spirit Fund, that says a lot, I think. So very good call, mate. Right, I'm gonna do what I normally do and pick something completely radical and off-piste, spelt with P-I-S-T-E, for those that are of a sensitive nature. It's a skiing reference that you may have heard of, Henry, or you may not have heard of. So where do you want me to start with this one, Henry? I'll start with the deets. Okay. This company is called NIOX Group, Henry. British medical device manufacturing company focused on treating people suffering from respiratory diseases. Respiratory. Change the name, Henry. This is the old name I'm sharing with you individuals now and listeners, ladies and gents. In 2022, the company changed its name from CMC Group. Remember that one? That name?
Yes. Yeah.
That's where the name was, to NIOX Group. So the company produces its NIOX, which is nitric oxide range of fractional, not tokenized. Sorry, just trying to trigger Henry again. Fractional exhaled nitric oxide devices to help diagnose and manage asthma. So the company is a provider of point of care, and the shortened version of that, what I've just said, is FENO, F-E-N-O, fractional exhaled nitric oxide measurement and monitoring systems, listed on the stock exchange, an AIM stock, as I mentioned before. And it's done reasonably well of late, Henry. So that's why I want to talk about it. Direct offices in the United Kingdom, United States, Germany, Sweden, and China. So it's got access there. And we know what people say about China and the smog and all the rest of it. So their products should do reasonably well there, and testing devices as well. Interestingly enough, Henry, their global reach at the moment for this company, which has got a market cap of 285 million, is in excess, and their products are utilized in over 50 countries. And they're committed to expanding their patient and diagnostic reach as we go. Why am I talking about it? Because today they had a trading update, Henry, and you might be able to pull that up in a minute. And they came out and basically said that they're doing really well. Focused execution of strategy delivered a strong performance. And the highlights were revenue growth, and you like this, revenue growth of 20%, or would be 21% on constant currency basis, to approximately 25.2 million versus 21 million in 2024 year on year. Clinical revenue growth was up 8%, 9% on constant currency, to approximately 20 million versus 18.5 before. Research growth. Now, this is a bit where they're looking into different solutions for other people as well. Research growth, revenue growth was up 108% to approximately 5.2 versus 2.5 million before, due to increased clinical trial activity involving pheno testing for both asthma and COPD. And adjusted EBITDA, although some people don't like it unless it's their stock, then the share price is going up. Adjusted EBITDA, no one really likes it, to be fair. Up 30% to approximately 9.2 million versus 7.1. And you'll like this, Henry, for a company with a market cap of 285 million. Strong balance sheet with 11.8 million, and that's after the payment of a dividend, which they also pay, Henry. So forward PE is a bit high, a bit rich, of 26, a PEG of 2, forecast yield of 1.2. I think I got that right. Might be 1.7 if I remember rightly. If I got that wrong. Interestingly, Evany, I keep calling you Evs, and that's what I keep calling me. My daughter's.
It's a bit worrying,
so.
this.
Evs. I keep calling you Evs instead of
There's
Henry.
a few major differences.
Henry's not my daughter, by the way. So Roche, yeah, return on capital employed. Again, Henry, is a metric that I know you like, and we spoke about recently as well. Current Roche is 10.8% versus a 3-year average of 5%.
So
that's
they've doubled their return on capital.
3 years. So it's actually accelerating and getting better to get to 10.5. And over the past year to date, the share price is up 9.5%. Interestingly enough, Henry, and some people don't like names being changed of companies that they own. And it changed it from Circassia in 2022 to NIOX, if I pronounce that right. NIOX, sorry, I think it's NIOX.
NIOX.
It's up 100. Yeah, NIOX is up 113% since 2022. We changed the name, the share price. It started moving and talking about our name is about what we do, and they've got some reasonably good updates since then. Gross margins has improved a little bit over that time frame as well. Revenues have increased, gone up 113%, Henry, in the last 3 years. Quietly gone about its business. So reasonable sized company. Over to you to annihilate it. Price range is 53 to 77. It's currently sitting at 69.
No, this
anything
is exactly,
you like about that, or nothing you like about that?
This is exactly the sort of business I like.
My gosh! I'll take
got,
that. Stop there. Don't
not,
say anything more. Don't say anything more. I'll take that.
You've not gone for one of your gold mines with no gold in it.
Oh dear! I don't always do that.
No, this is exactly the sort of thing I like. So let me tell you why I like this business first of all. So first of all, it's profitable, right? It can actually make money, and it's not just been making money for 5 minutes. It's been making money for years. Its income, so top line revenue, has grown quite dramatically. If you go back to 2015-ish, turnover was about 10 million. It's gone all the way up to it's more than tripled. I mean, it's up at about 40 million now, quadrupled really, which is good, right? So people want this product, they're buying it. Good. It's also then making profit on that revenue. So quite often you will see businesses that the more they grow, the more they lose. And I hate companies like that. And if you go back a couple of years to when NIOX first listed, by the look of it, this was exactly the sort of business I hate. The first year revenue was 10.8 million. Pre-tax profit was a loss of 62.8 million. Second year revenue was 23 million, so revenue doubles, and the pre-tax profit, is a pre-tax loss of 36 million. So they've now lost a cumulative 86 million. Third year, we've got revenue of 46 million. So they've now 4x their turnover, and they lost 60 million, a bigger loss than any other year going. So they've now lost a cumulative, 140 million pounds, having turned over 60. Yeah. To me, at this point, I'm going, oh, Jesus, I don't want any part of this. This is a disaster.
Mhm.
Fast forward a couple of years, however, and the figures look a lot better. 2021, we've got a 10% profit margin all of a sudden out of nowhere. Small profit of 2.3 million on a turnover of 27. 31 million turnover, pre-tax profit shoots up again to 10 million. Profit again the year after of 4 million, profit again the year after of 7 million. Very different business now. You've invested, you've built, presumably they had research costs, presumably they had production costs and shipping costs. They had to build a business. Now they've built the business, they've got distribution channels, they've got production channels, and they're profitable. Now it's an investable proposition for me. So then there's a question of how good is that investable proposition? Well, turnover is forecast to grow, earnings per share is forecast to grow. It pays a dividend. It's beaten my return on capital hurdle of 10%. So there's a lot of ticks there as far as I'm concerned. Now the sector makes me a bit nervous because I don't know pharmaceuticals all that well, but on the metrics, on the financials, I quite like the look of it.
Thank you, mate. I really appreciate your candor there. The notes that I've got here say that December 2019, Steve Harris announced that he was resigning as CEO of the company. Ian Johnson took over as executive chairman of the company. Michael Roller replaced Julian Cotter as chief financial officer, and Jonathan Ems was appointed to the company in September 2019. Prior to that, became the chief operating officer. So I think there was a big change of management and strategy and thought process and what they were doing. So that they're getting the rewards now of what they've put together, essentially beginning of 2020, and that includes the massive headache and issue that happened to the markets because of the lockdown. So they're managing to get the rewards 5 years on now. Interestingly enough, and I'm always look for shrewdies that are on the shareholders list. This is something to look for, people, when you're looking at looking at companies that you think are good quality. If it's that good a quality, there should be other individuals that think so also. With Henry's earlier one regarding Tatton, you had Keith Ashworth-Lord, the Buffetology fame guy, and the Free Spirit Fund in there, holding a significant, amongst others.
Whether you are an experienced or new investor, you know how valuable it is to conduct portfolio enhancing analysis and to have easy access to data that will give you the edge. As a Twin Peaks investing podcast listener, you can access an exceptional offer, the UK's #1 investment data and analysis software for private investors and traders. This special Twin Peaks offer is available to new subscribers only, and you can subscribe using the promo code TWINPETES. The incredible and exclusive offer means that monthly subscribers will get their second month free, and annual subscribers will get their 13th month free. Sign up and subscribe today using the Twin Petes promo code, and you can save up to £69. Visit sharescope.co.uk for further details and subscribe to the investing and trading analysis and data you need.
With NIOX, you've got Harwood Capital Limited with 19.47%. You've got AstraZeneca with 16%. You've got a famous shrewdie called Richard Griffiths involved there as well. Go back to Harwood Capital. Who is Harwood Capital's main person?
Well, hang on. Can I just pause you there for a second? Harwood, I know. I want to come back to that in a minute. AstraZeneca is the one that really makes me sit up. One of the biggest listed pharmaceutical companies in the world, certainly one of the biggest in the UK, is a major 15-16% shareholder in this tiny little business. They've not done that for fun. They've not got 66 million quid just sitting around waiting to just gamble on black. They've seen something in this company, in my opinion. That's very interesting.
Yeah, that technology that they're working on, and you've got to remember AstraZeneca are massive in the COPD respiratory sector as well. So that's probably why they've got them doing the work, the testing and all the rest of it. And when things go well, that will go, accelerate. They've given them the money and also taken a stake in the business as well. So that's why they're involved in it. So Richard Staveley is the lead manager of Harwood Capital. And he also oversees Rockwood Strategic Fund, and he's got a big stake in there, nearly 20%. And I'm not sure if this is separate, but you've also got Morgan Stanley's got a stake in there as well of 4%, and Rathbones have got 11% as well. So it's not too shabby, that shareholders list, mate. So that's why I wanted to talk about that particular stock. It's done significantly well for shareholders. Could it do better going forward? So we'll see. But Richard Staveley, that's a person that's get backed by most people. He doesn't well, I say he never picks a bad stock. He's got a good record of picking good stocks. That's what we'll stick it there. So
he's also a very good speaker. If anybody gets the chance to go and listen to some of his presentations on YouTube and his interviews, highly recommend him. Very, very eloquent speaker. Very shrewd guy. And he comes across really, really well as well. Very, go and look him up.
Yeah, he's on our list of people to try and get before we close the window of all speakers and presentations for the Investor Summit. So we've not given up on him just yet. If he's not on holiday, we'll try and get him there. So yeah, so that's that one, Henry. I've got one more that I'll quickly run over that you're not going to like because of the sector that they're in. But yeah,
Lovely.
So yeah, thank you for that. I'm glad you like that one. What's your second one, mate?
Well, my second one is it's very similar. When I first came across this, I thought to myself, have I already covered this on a previous pod? And I don't think I have. I think I've done a different firm that's in a similar sector. The business is Quartix. The ticket is QTX.
Okay.
And they supply vehicle telematics services. They've got
okay.
two reporting segments: insurance and total fleet operations. And effectively, what they do is put little black boxes in cars and vans. So they are there to provide large fleet operators with data about what the vehicle fleets are doing. How are these things being driven? When were they last serviced? How often are the drivers braking? How fast are they driving? How much fuel is being consumed? To help fleet owners to optimize their maintenance costs, their insurance costs, because again, there's a whole thing with motor insurance where, if you have a little black box installed on the car, insurers will go, well, okay, we'll drop your premiums a bit if you can stay within certain metrics. If the speed limit is 30 and you stay between 25 and 30 in a 30 zone, we'll drop your insurance. If you don't brake suddenly too often, we'll drop your insurance because we view you as a safe driver. So they enable fleet operators basically to monitor vehicle locations in real time. Where are these vans? Where are these cars? What are they doing? Where are they going? Cut fuel costs and wasted time. What routes are your drivers taking? Where are they going? How much fuel are they using? Increase driver productivity and visibility, and minimize downtime with maintenance alerts. So again, if you drive for, 10,000 miles, let's say every 10,000 miles a part of your van falls apart. Wouldn't it be great if at 9,500 miles, we could just send you straight to the garage and get it replaced before you get stuck on the side of a motorway somewhere for a day? That's the sort of thing that Quartix enable fleet operators to do. And again, very, very high quality business, 32% return on capital employed, pays a 2.4% yield, forecast earnings per share growth of 7, nearly 8%. Real business with real revenue, real profit, providing a real service. And this is exactly the sort of company that if an overseas purchaser doesn't come along and snap it up, I could easily see a big footsie blue chip coming and buying it. Very, very real, very quality, very high quality company. And this is the sort of thing that's hiding in plain sight on AIM and getting written off as, it's all small businesses that don't make any money and all the directors are fraudsters, like at DGI9.
Yeah.
Any thoughts, Peter?
We have I like my tech companies, and essentially it's a tech company that doesn't get talked about as a tech company. The last one we had that was of a similar nature, Henry, got taken over, and it was called, I'm trying to brain scrambling now for the name. It's called Tellit. Remember Tellit?
Tell it. Yeah.
Tell It was a similar sort of company, which was there and thereabouts. It went high, it went low, then it middle, and it eventually got taken over. And it's something that actually a lot of companies. You think about how many logistics companies we've got around the world. They're all trying to get as efficient as possible. What's that you touched on, the most efficient route, fatigue times, loss of time, trying to say, look, change direction, go this way, go that way instead of that, they're always trying to just get their supplies or whatever they're doing regarding the chains of what they're doing there to the quickest point. But also, and I think you touched on this already, Henry, it's tracking what's being taken to various places. So something's going on that route. Why have they deviated? As it arrived at that point, yes. So the check-in all the way through the I just want to say the food chain as an example, where things are. Yeah. The supply chain is tracked all the way through from that warehouse to where it's meant to be. Track, all the way through. So yeah, I do like that one. It's a good quality company. I don't own it. I'd want to know, Henry, if you can pull it up for me. And you might have already said it and I've missed it. How well it's done this year, given that we were talking about how things have done year to date or the past 6 months. Have they performed okay regarding the volatility we've had so far?
Let's have a look. So wow. Shares hit an all-time low, a 5-year low of that looks like about £1 a share. The end of 2023. They're up 70% year. Currently sat.
Sorry, is that year to date you just said? You keep freezing, Henry. Sorry, mate. Did you say 70% year to date?
Yeah, year to date.
Yeah, you're breaking up a little bit. So that's another example of a stock that's doing well. I don't see a lot of people talking about QTX, and maybe it's got that sort of shade being given to it because it's an AIM stock. It's a reasonable size AIM stock, and it's done 70%. There's lots of stocks on AIM and on the FTSE that are lauded and championed and everyone loves that simply haven't done 70% in the past 6 months, 7 months, year to date. So another good one, mate. Another good one. And I'm ashamed to say it's a tech stock I do not own, and I should have been having a look at that. So good call, good quality stock. I'd have another look later to find out who the Shrewdies are that hold that particular one. I'm sure there's going to be some Shrewdies in that particular stock. So good pick. Right. I'm going to take a pause here, Henry, and do two things and give a quick mention to a friend of mine who's putting on an event. Just put up the deets here. And that young man is Alex Schleek of Yellowstone Advisory. And he's putting on an event on, let me just get the date right for this, because I don't want to get that wrong, do I? Where is the date for it? Where are we? Right. So it is on the 30th, Wednesday the 30th of July, 6 o'clock to 8:30 p.m, Mayfair, London, and Yellowstone Advisory and Killik & Co are hosting a private investors event. An evening of company presentations and networking to support prostate cancer research. Very important. A friend of mine that he's put a tweet out this week, been diagnosed with prostate cancer. Peter, Peter that we've had on the show, that was on here, spoken about that, and I've been speaking with him about that as well. So he's trying to fight that at the minute, going through all kinds of different things. He's in good health as we speak, but it's something that he's going to have to deal with and get help with for a good while going forward. So it's going to be hosted by Alex Schleek in London with Killik & Co. They've got J.O. Ambro there. They've got Polar Capital, Kenmar, Oxford Biodynamics, AFC Energy, Solnox, and Sakofa as well. Investment partners are involved. So if you can, and you're in London and you want to be able to attend there, it's a free event and it's got refreshments. And as you do in London, if you're in the Mayfair, you don't call it refreshments, do you? It's called drinks and canapes. So if you want to be going there, just go to the website, register yellowstoneadvisory.com/events, and that's for the Wednesday the 30th of July. So please sign up for that. Right. Quickly mention Menphys. The fundraise, we're raising money for young people regarding the employability program that we're putting together to try and get young people into the various careers, any careers. So we try and support them to do all their, as I used to call it from the Royal Air Force, all their basic training before they go into the place of work. We're trying to help them with all of that regarding this particular course we're putting together. So we're trying to raise as much money to get as many participants in that so we can get them into the world of work. So if you can make a donation to www.justgiving.com/page/Peter Higgins. That is the page for the Menphys fundraise that Twin Peaks are doing at the moment. We've raised £2,042 thus far. We've stuck on there for a month or so it'd be great if any of you can donate £1, £2, £5, whatever you can afford, to help us support more disabled children. Henry, do you want to hear my final stock?
Yeah, shoot.
Right, this is not
I'm curious what
like,
you've got.
You're not going to like it, but I'm going to tell you anyway. The reason why I'm telling you about it is because of what's going on geopolitically right now. And I'm not going to say much more than that about it. But this is an oil explorer company, Henry. It's called Rockhopper. They took over Falkland Oil and Gas in 2016. Or was it a merger? I'm not sure. I'm not going into much details about this. So 52-week range, ticker symbols RKH. You're already making faces. Let me finish. 52-week range of 12 pence to 62 pence. It's sitting currently at 61.6 pence. It's up 4% today. Market cap is a respectable 386 million. Year to date, anyone would like this, Henry? Anyone would like this? It's up 145% year to date. 1 year return, 321% year to date. And we're still making faces. These numbers means nothing to him. 3 year return, 761%. I don't know if that many. You give me a stock that over the last 3 years has done that. Any stock, I want to know about it, Henry. You can tell me on the pod. You can start doing some research on any stock that's performed better than that over the past 3 years. Anyway, so Rockhopper Exploration is an oil and gas, as it says, exploration company. It's HQ'd in Salisbury, Wiltshire, and it owns offshore exploration and production license in the North Falkland Basin, in the waters north of the Falkland Islands, and it's listed on AIM. Founded in 2004 to explore oil and gas around the Falklands, received it listed in 2005, blah, 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 blah. It's had a volatile time on the AIM exchange. I'm going to cut this to the quick. You've got a really good CEO now called Sam Moody. So given the share price is up 761%, boom, he's not going to be Moody, is he? The share price is up that much in the past 3 years. Moving on. That's my little joke for the day. So Henry, licenses, as I said, holds interest in production licenses PL023, PL024, lots of different acreage, but 3,800 square kilometers, Henry, of acreage, and that's just one of the basic sites. Why has the share price gone up so significantly in the past year to date, 1 year, and 3 years, Henry? And this is because of the progress made regarding the Lion project. So they've reported substantial advancements in their flagship Sea Lion oil field project located in North Falkland Basin, and it announced that it now expects the project to yield 55,000 barrels per day when peak production is reached, alongside a 16% increase in estimated recoverable oil resources which now stand at 907 million barrels. Yeah, they've got to get it out the ground, but yeah, that's what they're saying. And they've got strategic partnership with Navitas Petroleum that's bolstered development efforts across the Sea Lion project. Since mid-November, Rockhopper shares have surged 50% on the stock market, and the stock has nearly doubled since the beginning of this year. Well, I just said the VAV doubled year to date, 145%. Analysts have upgraded it significantly and are generally optimistic on oil prices and contributing factors to this bullish trend. So to conclude, Henry, combination of exciting news on the project, the share price accelerated. However, as Henry's going to tell you, I'm going to say it before Henry says it. Investors are advised to remain cautious given the long timelines typically associated with oil drilling and potential market volatility. Trudy's, I can't see any distinct ones here. Largest shareholder is called ADOS Advisors, which is a London company with 8%. SRM Global Master Fund has got 5.6%. Hargreaves, that'll be nominee accounts, I think, have got 5.3%. It won't be Hargreaves directly. That'll be holders holding the shares in nominee accounts. That's it, Henry. Do your worst. I know it's not a sector that you like. Yeah, the grimacing face gives
I was
it away.
joking. I was joking about you bringing me oil companies with no oil. I didn't think you were actually going to bring me an oil company with no oil. Now, I am certain that there are lots of very shrewd geologists out there that will tell me I don't know what I'm talking about, and that there is so much oil in, what was it, PL, whatever it was, 001, the Sea Lion project. There's so much oil out there, and all we've got
Basin,
to do,
say the North Falkland
Basin, right? All we've got to do is get a ship out there. We've just got to drop a cable down, right? We've just got to drill through a little bit of rock, and we're going to have so much oil. We're all going to be so rich, you won't know what to do. My only problem is this company is, when's this going to happen exactly? I don't know. 2025, 2026, 2027, 2028, 2030, 35. I don't know.
Good question, Henry.
So,
listen, go on.
But also, you know, you made a very, very wise recommendation there. You know, investors be cautious. You said investors be cautious because oil drilling and exploration can take a long time. Well, to me, it looks like investors have been anything other than cautious because the shares seem to be up about 6 billion% in about 5 minutes. You know, this to me just screams risk all over. Now, what I'd love to do, and I'm actually going to do this tomorrow, I'm going to go over to my energy division tomorrow because they specialize in oil companies, and I'm going to drop this company name out, and I'm going to see what my drilling analysts think and my sector experts, because I guarantee you they'll have an informed opinion on it, which will be far more valuable than mine, because all I see is risk, and this is a business with no revenue right now. But clearly there's something going on. So interesting name, Peter. Interesting name. I would echo your sentiment of buyer beware a little bit, but I think we're past that point. I think we left that somewhere at what's the share price today? 60p a share. I think we left that at around 10 pence a share, and we're now into this thing's gone to the moon. But
it was only the 52-week low is 12. Yeah, the 52-week low is 12.22 pence, and it's currently sitting at 61.6. So it's raced away.
It's made a lot of people a lot of money.
It's made a lot of people a lot of money that speculated on it. I was just pulled up because I couldn't remember it off the top of my head. Caveat emptor, Henry, is the word you were looking for.
Yes,
Latin.
buyer beware.
Let the buyer beware. Yeah, so that's me. Always want to give a speculative one, and also one that's I think is a good quality one. And NIOX would be the one of the two that I would pick long term out of that one. And from yours, I would probably pick Tatton if I was, even though I like the tech bit. I'd probably pick Tatton for solid solid continual growth on it. So yeah, so that's where we are with that one. That's me done, Henry. I'm not sure if you want to add anything, share anything, reiterate
That's
anything.
everything from me, other than to thank all of our listeners again for writing in, for your kind words of support for both the show and also for both Peter and I. Please do consider, we've had a little bit of a lull on the Menphys donations. Please do consider throwing a little bit in the pot. We are trying to hit the £5,000 mark, which is a donation to a very worthwhile cause. It would mean a huge amount if you are able to donate. Please do consider, if you've got, we've had a shed load of you book tickets for the Investors Summit. Please do consider sharing with friends and family and colleagues. Print something out and stick it on your work notice board. Tell everybody, stick it on LinkedIn, email your friends, email your family, WhatsApp them. We want to hear everybody talking about this thing. And we're very excited to see you all at the Investor Summit. So please do consider sharing that. And finally, thank you to everybody that read my recent half-year review on the blog, The Ethical Entrepreneur. I had some lovely comments back on it. There was a little bit of a gap between this article and the one before. I've been so busy at work, but honestly, it does make my day to hear from people that have read my work. So thank you very much for everybody that wrote back.
It was an excellent article, Henry, and I think what, other than the content and the facts, I think it's your style of writing that resonates with people, because it's more real. It's less about, it's not about the graphics, because you very rarely put a picture in there anywhere, but it's about the content and the quality and the style of writing and the realness of, you know what, I made a bad call there. That one's gone. That was my mistake. Hands up, made a mistake there. I misjudged it because the management said this that month, and then this happened, and it's like, nah, I can't. I'm not trusting them anymore. I'm moving on. Taking the hit. You admit your mistakes. You talk about the reasons why you think this new idea is a good idea, and the fact that more often than not you phase your way in to it rather than just going, bosh, I think I've got the timing right on this. You do no. I've started to take a position on it. So yeah, so it's a good way to go about it, and I think that pyramiding of investment into a stock is a good way to slowly accumulate the stock, so you can average a price in rather than just going straight away in on a stock. Yeah, so yeah, good, great article, mate. So thank you for that, ladies and gents. We've been here over an hour again. It's now 8:45. I haven't had my Scoobies yet, so I need to go and have something to eat. Thank you ever so much for your feedback and for your reposts and your comments and your likes and your support on all the different channels, and also for supporting us, even though you have to look at our ugly faces on YouTube. Thank you for continually support. Well, my ugly face, should I say. Henry's the good-looking one on YouTube. Thank you for continuing to support us on there and liking that. We will look forward to seeing you, sharing your conversations and comments about the Investor Summit, and we really look forward to seeing you on the 13th of August. Please visit www.investorsummit.co.uk and buy your tickets. We'll look forward to seeing you. We hope you enjoy this podcast. We look forward to your feedback, and have a wonderful weekend when it arrives. July weekend, schools close, everyone goes on holiday. Have a cracking one. Ladies and gents, take care and goodbye for now. Give lots of love to your loved ones and look after yourselves. Bye for now. Over and out.
Twin Peaks Investing Podcast is brought to you in association with ShareScope, the UK's #1 investment data and analysis software for private investors and traders. Visit sharescope.co.uk and discover the advantage.